I recently got an urgent request from a longtime client. The company is operating in the logistics industry, and its tax deadline was looming. The core issue? When the accountant looked at 2024 balance sheet report, the bank balance in QuickBooks did not match the actual balance on the bank statement. This isn't the first time I've encountered discrepancies during a QuickBooks reconciliation. I even made a previous video on dealing with incorrect bookkeeping entries. You can check that out via the link in the corner. Ideally, a company that does its bookkeeping monthly shouldn't run into this problem. However, given the high volume of transactions common in the logistics sector, it's highly possible that a few were missed, overlooked, or simply handled improperly. To tackle this, I guided the client through a methodical process. First, I had them compare the ending bank balance on their bank statements with the corresponding balance sheet figures for each month. This pinpoints the exact month or months where the error first occurred. Second, once the problem period was locked down, we moved to a detailed line-by-line investigation within that month. Fortunately, the client had gone through my QuickBooks training back in 2024, so with just a bit of simple guidance, they were able to quickly self-diagnose and isolate the problematic transactions in their QuickBooks file. The client quickly discovered the root cause, an issue with the fund transfer between their company's checking account and their savings account. The problem was that one account, checking, showed the money had been deducted, but the other account, savings, had not yet received the deposit. Here's the 3-step fix we implemented. Contact the bank. The absolute first step was to contact the bank and find out why the funds hadn't arrived in the savings account. This is a crucial step that I've seen before, and I plan to do a deep dive video on it soon. Be sure to subscribe to the channel so you don't miss that update. Adjust the books, journal entry. Since the checking account had already been debited, showing the transfer out, but the savings account hadn't been credited, showing the transfer in, we needed an adjusting journal entry. The money essentially had to be put on hold or held in a suspense account until it was officially received in the savings account. Redo reconciliation. Because these adjustments fundamentally changed the transaction details for accounts that were already reconciled, the reconciliation process had to be redone. Any prior adjustment entries made to balance the books would also need to be reviewed and potentially reversed or modified. Finally, a reminder for the business owners in California. Due to the recent fire-related disasters, there was an extension for corporate tax filings in certain areas, but the October deadline is fast approaching. If you haven't filed your 2024 taxes yet, please complete them as soon as possible. On another note, the 2025 tax laws have undergone some significant changes. I'll be releasing a full video breaking down the new tax legislation, so keep an eye out for that update. What's the trickiest reconciliation issue you've ever had to solve in QuickBooks? Let me know in the comments.